Okay, guys, good morning. It's BA here with the Friday recap and weekly zones. Saturday morning, November 19th, 2016, and today in this session we'll just take a look at how the markets unfolded for the week. Let's get right to it. All right, we'll start off with the S&Ps. You can see here the S&Ps, they broke above that channel we had been tracing out for quite some time. Went right down to the bottom of this channel. That's when the opening came. This was 2 weeks ago. This is the election night, one of the biggest bars in history. In one day move. That's a year's move, guys, in one day. We've talked about that before. Then we just drifted higher, after that. But we held within the week's range, no jeopardy there. We closed another successful, profitable S&P 500 strangle out for the week. So S&Ps behaved normally within their statistical possibilities for the week. So nothing major happened in the S&P market for the week. Zones held. In the ZBs, they were good boys last week, staying within their zones as well. So nothing out of the ordinary. ZBs have just had monster moves. The biggest bar in the ZB's history of trading, that one bar right there. So again, we talked about in this bar, if this had occurred during normal market hours, circuit breakers would have kicked in. They would have stopped the bond market. Now it's just really funny how they stopped the bond markets to protect everybody, all the capital that's on one side of the market. So everybody is long bonds like they are long stocks. I want you to understand that, and how they try to manipulate the markets to keep them from. They let them be as freely traded as they're comfortable being. But nobody cares how much the bond market goes up. I mean, nobody does, because that's lower interest rates. But man will get in there and try to control the descent of bonds, which means rates are going higher. It doesn't work, guys. It never does. It never will. It's a band-aid fix. They just need to let the markets go. It's just my opinion. I know there are far more guys a lot smarter than I am about this, but when you allow a market to go one way as far as it can, you're not thinking about the flip side of that, about what that's going to do in the other direction. So I say when you stop these things, it's just more pent-up demand in the markets. So let them trade freely, let them flush everybody out, and let them roll back the other way. You can see here that the market just continued going down. So even had they stopped them there, I would have bet money that it would have been more violent to the downside, when they reopen this market back up. That gives traders a time to reflect, and sometimes that time to reflect in those moments where it looks really ugly and everybody is long bonds. I mean, not just long like in the stock market. The participants in the bond market are not average retail traders that have, $10,000 or $50,000 in a mutual fund account. These are sovereigns. These are institutions that have tens of billions, trillions of dollars, or hundreds of millions of dollars tied up in these very safe bond markets. So, just my thoughts on it. But anyway, bonds were good this week. Crude, this was Monday. Our support that we identified held. It probed it, closed back above it, and we got above. This was our line right here a couple weeks ago that we said, hey, it's got to close above that. Well, it did, shook everybody out, came back up, and now it's back above that level again. So now we closed above this critical level. I didn't draw a line on it, but you can see right across there how important that zone is. I'll do some more updates on directional biases of the stock market. I'm starting to refine those models a little bit. They'll come into a little more play, once I get once I get my blog and everything operational and the website. So those are just some of the plans for the upcoming near term future. But this big rally right here was Putin's attempt to buy an island and a couple Lamborghinis. It probably worked. Had a big 6% up day that day. Hey, when you need a couple $100 million and you're one of the biggest oil guys on the block, all you got to do is leak a little information, peel off a couple $100 million. Don't worry about the markets for another year. Come back in and just rinse and repeat once or twice a year. I mean, that's all you really need to do. So anyway, markets rallied strongly that day. Putin cashed in. Now, of course, guys, I'm just hypothetically speaking about what I think is actually occurring, which is probably close to the truth. So yeah, everybody made money that day, wrung everybody out, exactly what they wanted to do, and markets reacted a little bit to it, but then just kept driving higher. Hey, this comment right here, these comments have much more effect at bottoms, the up moves. A comment like that to scare people has a much more of effect at a high. Because what you have to understand is traders that are short these markets on a big move down like this, they are getting very, very nervous and antsy. And they're looking for a reason to just hit the sell market or hit the buy market to close their shorts out. So people that release stuff like this, and we know it's a bunch of crap. It's just like the January rally. They knew what kind of effect that was going to have on the markets as low as this market was. They react violently at the extreme. So they're not going to release bad news down here at the bottom. They're going to release positive news because traders are very, very jittery. And these aren't investors here in the crude market, guys. Let's get that straight. Again, not mutual fund investors. These are sophisticated traders, sovereigns, guys out there that are that push a lot of contracts. Large individual traders like Paul Tudor Jones, who lives in these markets right here. They don't trade 50 or 100 crude contracts. These guys are trading shiploads at in one fell swoop. So when you're short a ton of these things, you're looking for some reason to get out and hit that buy button. And people that release these news at these critical times, they are definitely not dummies. They've lived in these markets for a while. They know the effects. They know how to play the game. They know they can do it. They don't do it very often because they know eventually the game will come to an end. So hey, just wait for the right time, release your info, make a couple $100 million, and then just wait again. That's how the game works. But for us, we play statistics and probabilities. That's all we've got. It's really all we need. Dollar is just marching higher, guys. Dollar's telling us something. A lot of times you got to let these moves really get underway before you can determine what it's trying to tell you, but the dollar, I think, is really trying to tell us something right here. Now, we get an abrupt reversal and start back down the other way, then I'll say it was a false move, but I think the dollar's telling us something right here. Gold was a good boy last week, but you can see gold is reacting to the dollar's up move. That is normal. It's the way it's supposed to work. So at least that relationship is holding true right there. Again, it's good to see some of the relationships return back into this very, very manipulative market. So I'm glad to see that. Doesn't matter to me which way either one of them go. We just need to, at some point in time, be ready to step in and play this. So that is it for the weekly zones for this week, guys. I just want to flip back to the S&Ps and just reiterate. We are right up against some resistance up here. I do not expect a crash by no means, even though we've ran 160 points plus up from this low right here in just a very short period of time. But we are up against some resistance, and seeing this market wiggle around a little bit up there before it shoots back through it Wouldn't surprise me. We're going into November, into Thanksgiving week. That's typically a bullish time, guys, and we're getting really close to the expiration cycle. So yeah, that's coming up on us too. So a couple of bullish things going into December. Next thing you know, we're going to be right up against the Fed announcement. So anyway, that's a wrap for this morning. Guys, have a really nice weekend. I'll try to send a couple other updates out, before Sunday night. And this is BA signing out.